Sir, Pramod Deshpande, sir. So I think we can go ahead and start now. We have around 62 participants. If you are ready, just to give a brief introduction about yourself, sir.
Yeah, I'm ready. We can start. Yeah.
Okay, sir. Thank you so much. And very good afternoon to all of you, students also. Today we have Mr. Pramod Deshpande, who has got a huge, vast experience both in technology as well as in insurance. Mr. Pramod Deshpande, the Chief Innovation and Delivery Officer at Algos Genius Company. And he's got over 30 years of experience working with various organizations across geographies, etc. And he has been instrumental in defining digital strategy and developing digital solutions for insurers. And he has worked for 14 of the India's largest P&C insurers both as underwriters, claim administrators, and general management, etc. And he has worked extensively in many companies countries like USA, Europe, Latin America, Japan, China, etc. So I think we are very privileged to have Mr. Pramod Deshpande today to talk about insurance. Sir, I'll hand the platform over to you. So please go ahead and start, sir. Thank you so much.
Thank you for the introduction. I guess I'm audible. So just to give you a quick background, right, about insurance. So like you were saying, I've worked as an underwriter or claims guy, and we will talk about what is underwriting and things like that as we go along in insurance company. And then I shifted to the other side of insurance, which is technology solutions for insurance. And why I'm telling you this is because this has got some relevance in what I'm going to present to you and about opportunities, career opportunities in insurance. It's not only in insurance, but with insurance, you can have a successful career also in technology. So that's my point. That's where I just said, let me introduce you to myself to you guys. Yeah. So let's move on. So what we are going to do today is we are going to have an overview of insurance business. Now, insurance is a very, very, very vast and complex subject, right? And 1 hour or 2 hours is not something which is going to give us an opportunity to go into depths of it. But my attempt will be to first let you know what is insurance, and then what is kind of size and status of insurance in current day, and then about what are the opportunities you can have in insurance, and fourth is what are the educational opportunities in insurance if you want to get into insurance business as a career, right? So let's start with our presentation, and I hope you can see my presentation, right? So what is insurance? Let's first start with that. So how are we currently dealing with COVID? Now everybody is well aware of there is a SARS-2 pandemic which is going on, right? With coronavirus, and how we are dealing with it. So now we have identified the risk, right? That risk is that virus called coronavirus. How we are dealing with it? So we have decided some treatment, then some strategies about it, and some tools around it. So first, foremost, what we are doing is we said that the treatment is let us control the spread of this pandemic. How? So we have strategies of avoid or reduce. Right? Avoid is where earlier there was lockdowns, we didn't go out at all. That was earlier when some part of it we tried to avoid, but we can't avoid a risk always. Then we have to think of how we can reduce the risk. So that's where what we started doing is we started mask, segregation, and social distancing, hand washing, etc. So let's go back. We identified a risk. We decided that first we will try to control it. In that control, we have strategy of avoid and reduce, and in that we use these tools of lockdown, don't go out, or mask segregation, hand washing hands, etc. Right? But with all of this, still the risk is not going to be controlled. Yeah, we know that there are, you always see so many cases are happening, right? Because it's not possible to control it 100%. So then what we have to do? So when we say risk, there is always a part of that risk is the effect of that risk is if you say if you continue with the COVID example, the problem is people getting ill, or worst case scenario, people dying of it, and that's why we're controlling it. But the other part of it is there is a lot of financial loss which is coming out of it. Right? You have to pay hospital bills. If somebody who is the bread earner of the family, if that person gets ill and dies, right, then there's a larger financial risk around it, right? So impact around this risk. So then we have another strategy, right, which is a finance strategy, because we can't control 100%. So whatever percentage remaining, we try to finance it. How we try to finance it? So there are strategies of transfer and share. What it does that mean is, transfer is we can buy insurance, and anybody having a medical policy in India is covered for, if your treatment, COVID treatment is covered under that. But there are many who do not have that policy. Yeah, people don't think that they need a medical policy, because police doesn't stop you on the road and ask you, like in your two-wheeler, where is your insurance? So majority of people doesn't bother about buying medical. So then there was a new insurance policy came in, which is called COVID coverage. So we are transferring that financial risk to insurance company. Then there were government who's paying some money, who's trying to do a lot of things by paying money, finance part of it. Then there is pooling. Some people come together, right? They pool in money and give those families who need it. Right? So these are transfer and share. So if you see, insurance is a risk management strategy, right? Where risk management treatment, where we use strategies of transfer and share. Right? That's insurance. That is how insurance fits into the entire risk management. So of course, then there are people who will not even have insurance, so they are going to self-absorb whatever the cost of hospitalization, etc. Why I took this example is because this is very recent to us, and it's better understanding for insurance. So let's now move on with this example and start understanding what is insurance a bit further. Right? So as we said, insurance is a risk management plan. Right? We just saw risk management. It's a risk management plan that, for a price, offers the insured an opportunity to share the cost of possible financial loss through insurer. The important word here is financial loss. Insurance can take care of financial loss only. Right? If life insurance covers your financial loss, it doesn't cover the person's death. We can't do, insurance company can't do about anybody dying, but whatever financial loss, it will cover. In your car or vehicle, if there is accident, there is going to be accident. So whatever financial loss out of that, that is only covered. So financial loss is a very important word for insurance. Or we can say it is a system where losses suffered by a few are spread over many, exposed to the similar risk. Now again, consider our example of COVID. Right? There are many who are exposed to this risk, but is everyone going to get that risk? It's not. Right? Our fatality rate is 1%. our infection rate is not even 20-30% of your entire population. So that's where a system, if we let's say who are all in this call, if we decide that let us say there are some 80-90 people in this call, right, and all of them are exposed to the same problem of COVID, so let us shell out 500 rupees each, and whoever gets admitted, we can pay money from that pool, right? So that is why where losses suffered by a few are spread over many, exposed to the similar risk. So when you buy a Maruti car, right, you become a part of a similar risk of owners of Maruti car. Now, why Maruti car? Because Maruti car's engine has some X capacity. It has got some X amount of safety features, right? So that's why you become part of a similar risk group, and accordingly you keep on paying some money to a pool which is managed by insurance company, and if something happens to your car, you get out of it. So there will be 10 lakhs of Maruti owners, and out of that maybe 1000 will get into accident in a year, right? So whatever this 10 lakh have contributed by 500, 1000, whatever may be the premium, which will be used for these 100 people who have faced a financial loss. That's why this is a system, and this is a technical definition. Yeah, it is a contract between two parties whereby one party undertakes in exchange of a fixed sum to pay the other party a fixed amount of money on happening of a specified event. Right? Now, who all are these parties? One party undertakes, this party is called insurer, which is insurance companies. So insurance company undertakes in exchange of a fixed sum. What is a fixed sum? It's called premium. And to pay the other party a fixed amount of money on happening of a specific event. So that so the second party is insured. So insurer and insured, and there is a premium. So if you undergo a loss for your Maruti 800, are you going to get a claim of 35 lakhs? Of course not, because Maruti's cost is not 35 lakhs, right? It may be maximum 7 lakhs, 8 lakhs, whatever may be your model. So that's a fixed amount we are talking about. You get that fixed amount only. You don't get, sun and moon under this policy just because you bought something. But if you have a BMW, then of course you will get 35 lakhs. Then your premium will be higher. So in exchange of a fixed sum, that is the premium. So I hope you guys kind of got what insurance is, right? We started with the example of COVID to make you understand this, right? So a contract, we take the Suraksha Kavach, that COVID Kavach, right? Insurers ask us to pay a premium, which is that fixed sum. And on top of that, they will say in the policy that you are going to get ICU, some 25 days of ICU or 50 days of ICU maximum. Outpatient treatment for some days, bill to this range only, right? So they will fix that amount, and we will get that. If God forbid we have to undergo, if we get exposed to the pandemic and we have to go to the hospital, this is how it will work, right? So this looks very simple. It is very simple. You just come, put money, and if something happens, you are going to get that. But it is not that simple. It is a very, very, very huge operation. So let us say, what are the entities in this business? Because it's a very huge operation. And how huge, we are going to see in next slides. Yeah? So there is a proposer, the person who wants insurance. right? That's the first party, we said that. Then there is an insurer. In US terminologies, that's called carriers, insurance company, various names. But so these are two. Every time we don't go and walk into insurance company's office to get a policy. I guarantee that out of this 90 people, not even 9 people would have gone into insurance company's office so far, right? Just think. Have you ever gone to insurance company's office? You have gone to a bank, but have you got into insurance company's office? Very rarely, right? So then how you get insurance? So either you can go directly, but as I said, which is very rare. So you go through, nowadays we check web, right? Immediately we will Google, we might go to Policy Bazaar, and there are hundreds of ads on TV. We choose something from there, right? And they say that you go on this page and you will get insurance. Or there will be people whom you can call and get your insurance, or they will call you to say that, do you want an insurance? We have Suraksha Kavach, this COVID Kavach, and things like that. Right? Or this is somebody who's quite common. I don't know how many of you have met this gentleman, but I'm pretty sure the your parents or the elderly generation has always known one agent, insurance agent. So you give information to that agent, and that agent gives information to insurance company, and vice versa. So actually, he asks you to do insurance. So anybody in this world actually comes to know about insurance because of an agent. Nowadays, of course, there are ads, etc. But typically, it is because of an agent. So that's a very important entity. Now with this, because you join a college or you are going to join some corporation, some organization after you are passing out, because you are part of that, that's why you get insurance. So anybody who's working in a big office is insured. So that's where you actually joined an institution. You doesn't join for getting insurance, but that institution gets you to insurance company. So these are again very important entities in the entire entire landscape, right? So now there are new entities which have started coming. They are called brokers or consultants. So these brokers or consultants also, they will reach out to you and they will reach out to insurance company, like the agent, right? But these brokers and consultants are a bit different, because this agent takes you to one particular insurance company, whereas these brokers and consultants, they will tell you, see, I know insurance company 1, I know insurance company 2, insurance company 3, some 6, 7 insurance company where he has a contract. They have this policies. So that's a broker, right? And depending on which is suitable to you, with your money, whatever exposure you are going to get, etc., you choose the policy. So we have seen this institution, agents, web, telesales, brokers, and consultants. All of these are called intermediaries. Yeah, are called intermediaries. Why? Because they are in between we, the proposers, and the insurance companies. Once we get a policy, we will be called insured, not proposer. Okay, so not policy holder, maybe not insured. Right? Is this part clear? But does this entire thing stops here? Because it is very simple, right? You want something, you go through agent, get it. But actually, insurance is a so complex business that it doesn't stop here. So then there are other entities. They are called surveyors, assessors. There are various names to these guys. These are the guys who tell insurance company what is the risk involved in that particular insured item. So if you forget to renew your car insurance, and if there is a gap, or a two-wheeler insurance, if there is a gap, they will say that you show it to a surveyor, and that surveyor will inspect the vehicle and say that yeah, there are no damages. If there are damages, he will note those, so you can't claim them later because those are pre-existing. Or whenever you get into an accident, then an expert comes to decide what is the loss. So these are surveyors and assessors. So I'm just giving you example of vehicles because that is nearest to you. But there are, these experts are of so many types, and once we see a lot of uh, types of insurance available, you will realize what it can be. So let's assume you have your house, and a house gets damaged by earthquake. Now a mechanical engineer can't be expert for that. A civil engineer has to come and decide what is the extent of the damage. If there is a water damage happens too, so now we know what happened sometime back in Bangalore, right? And it happens quite regularly that areas get inundated. In that, what happens is your car becomes a fish tank, right? Like a fish tank, it will sit in a pool, and so it gets affected. Also, the water goes inside your house. So now there are two experts required for the same claim of flood. One, a mechanical engineer who will analyze what is the problem for your vehicle, and second, uh, a civil engineer, right? He will figure out what is the extent of damage to your house, right? So these come in various shape, various expertise. I'll stop here about his expertise. We will come to know about what types of insurance once we go ahead, right? So yeah, that's another very important entity in the business. So now what is remaining? Everything is done here, right? I want something, there is somebody who is providing me. Now that person, that institution or that organization needs some advice, so that person is also here. Everything is covered, right? But actually that's not the point. If tomorrow there is a huge flood claim, insurance company will have so much of claim, right? Or it's a huge, we don't see so many of earthquakes here, but there are earthquake prone areas, and there is a lot of damage there. Or uh, now if you see, currently if you are reading news, listening to news, there is a wildfire in California. So these kind of risks, they are so huge that insurance company has a problem, right? Another man made very big, the biggest in insurance history was 9/11 attack, right? At the two towers collapsing, billions of dollars of claim. Now how insurance company is going to pay that? They are very huge claims. So for that, what they have is called as pools and reinsurers. So like we are going to insurance company goes to a reinsurer. That's the insurance company, but they don't deal directly with us. They direct deal with these insurance companies. Or some insurance companies come together and create a pool where they give some, because if you come to that, insurance company also will have to pay premium. Yeah? Remember the definition, right? For a fixed amount, a contract between two entities where one entity agrees to pay a fixed amount if you give them a fixed amount. So these pools or reinsurers also will take premium from insurance companies. Yeah? And if there are claims, then they will pay to insurance company in turn will pay to us. We do not see an insurance company as reinsurer. We need not. Our contract is with insurance company. It is their problem to figure out how they are going to pay our claims. Yeah. So, and if you consider this scenario, that if let's say an insurance company takes insurance in Bangalore, right? And then there is a flood. Then insurance company has a problem because all houses they have insured are under flood. So for that, what they do, they go to a reinsurer who is not in Bangalore, who is in US. So the risks are different. It's not going to be flood at the same time in Bangalore and at the same time in US. There is a variation, right? So they will try to insure with somebody which is away. Now that means there are so many insurance companies. They also need somebody in between, an intermediary in between, and they are also brokers. So these are brokers. So these brokers are very powerful organizations. Yeah, they have tremendous knowledge of world's risks, and they have a tremendous amount of money as well. So these brokers are very important part of making us our policy at 100 rupees. If there is no reinsurance, if this part is not there, our policy will become 500 instead of 100. Yeah, because what they get 100 rupees from us, out of that 30 rupees they give it to them, right? That is how they reduce their risk. Insurers reduce their risk. So though we don't see this right hand side people, or we need not see, but their presence helps us, right? So these are all entities in the insurance business. Why I'm showing you all these entities is at every place of these entities is where there is a career opportunity. And this is a huge landscape. You are not even getting an idea how huge it is, and I have some numbers to tell you as we go along. But in India now, as of now, so from 99, India opened private insurance companies. Earlier there were no private insurance companies. When I was working in a government-run insurance company. Okay. So now, after 99, there are 54 insurance companies in India. And in 1970s, somewhere around 70s, before that also there were insurance companies in India. Do you have any idea how many were there? Around 250 companies, insurance companies were in India at that time, and that number will increase. Current number also will increase, but we are just talking about India, right? There are hundreds and thousands and not thousands, there are lakhs of companies in the world, and everywhere this career opportunity is available. And insurance is a well-paid job. Yeah. So I hope you understood what are the entities. You need not know everything in detail. This is just to give you an idea, right? Okay. Now we need to know what is that they do. All of that is fine. But what is internally they do? So we are going to look at very high level. This is very high level. Their key business processes. So first it is product development or actuarials. So when when the COVID came, right, before that, there was no risk at all. This risk was not present in world. Nobody knew what is going to COVID is going to do, that Corona is going to do, how COVID is going to affect us. So that Corona risk came now. So somebody has to design a policy for it. So how you design a policy for it is they do a lot of statistical calculations. These are called actuarial. That's actuarial science. And then they decide that every person will have to pay 2,500 rupees for 3 months cover of COVID only. So this is a new product which has been designed. I gave you an example because you are lucky you're conducting this now because you have something immediately to think about of a new risk. If Corona would not have been there, a new risk or new product, you would not even have realized how that comes, right? So what can be the demand? What can be the profitability? How the product should be designed? Whether it should be 3 months, 6 months, 1 year, right? Those kind of things somebody has to start thinking. Why not 1 year? Because within 1 year, if the vaccine comes, the risk is going to reduce drastically. So people might not need this policy. So then what should be the ideal time period? So all of these are things what they decide. Then they will say this is required for a family, right? So 2,500 for one person, but if three people from a family takes it, it is instead of 7,500, it is 7,000. So rate plans, etc. So this is an actuarial department, a product development. As I said, it's a very high level. There are a lot of things into it. Then there is a marketing. Those all ads you see on TV, they will say some specific message to you. That is marketing, right? Those who have marketing as specialization understand that. But after that, there is a sales where actually somebody has to go in market and sell the policy. So those are these agents, right? So they identify the target markets, they work with the actuarial and say that this how you should, can you add this feature to the policy and all of that. Brand awareness, and of course then sales. Now, in all other industries or businesses, when you create a product, you just go and sell that product. You don't have to worry about whom you are selling that product. Insurance is a business, very peculiar business. You want to sell your product, but you also want to make sure that you are selling the product to a proper person. So the risk profile, what we call, what is that risk? So if I'm going to sell this policy, car policy to somebody, is this car worthy or it is already so damaged? Somebody has to decide that, right? So going to Corona example, if your age group is such and such, your chances of getting COVID is lesser. If you have other comorbidities like if you have diabetes, if you have kidney, all of those are called comorbidities, then your chances are more, risk chances are more. So somebody has to look at that particular risk and decide whether that product is to be given to that person or not. Those are called underwriters, new business or underwriters. They classify the risk, then they figure out where to shall I give it to him or not? Yeah? There are a lot of things they look at. Then once you sell a product, like any other product, there is this after sales service. Right? Same thing for insurance as well. If you take a policy, your address will change. So many things, right? If you have a car, you add something to the car, various things. So your policy always has to be maintained. If there are changes has to be done, that has to be done. You have to first issue the policy. So all of this is called servicing and policy admin. This is a very, very tricky or very detail-oriented operation. Very precarious operation as well. Insurance company has huge operations teams for that. And then the most important part is claims. Insurance company sell only a promise. They don't sell anything else. They sell you a promise saying that if something happens, I'm going to pay you a claim. So for them, claim is a very important aspect. There is a misnomer that insurance company don't want to pay. This is absolutely wrong. Their existence is for claims payment only. So they do not shy away from paying you claim. No insurance company does that, provided you give them all the required information. Those who say that my claim was not paid don't give enough information what they require. And insurance company, then people will say they didn't give me claim. If you have enough information, whatever is required, that's why they are there. They are there to pay you claim. They are not there to issue a policy. The entire idea of insurance is paying claims. So they will pay claims I have been doing claims management for so many years. If you go to insurance company's office, the claims department will very proudly showcase the large claims they have paid. They very proudly will show on their website that their claim percentage, claim clearance percentage is 97%, 98%, whatever may be the case. Yeah. But it's a very, very tricky situation. There are so many clever people that they will come up with so many ideas. We have billion people in India, so there are billion into at least 10 ideas thinking that they will fool insurance company. And that's where the losses of investigation is a lengthy, very lengthy process. Yeah, it depends on lot of things. Depends on information coming from police or other government authorities. That's where claims management takes a lot of time. If you have gone to a hospital and you now get discharged, but if your claim has to be paid, the hospital has to provide insurance company a lot of information that it was you who only came to hospital, it was only you who had, let's say, typhoid or whatever may be the problem, right? All of that has to be proven by the hospital, not insurance company, right? Because hospital has done it. So all of this work keeps on happening in claims management. So claim, once it enters a claim, it takes at least 2 months, 3 months, 6 months, 1 year, depending on how complex is your claim. And claims are very, very, very complex. And the insurance company also have to be very fair. Yeah, because if you go back to the definition, it is loss suffered by a few are spread over many. So if I pay a person A 10 rupees extra, from where I am paying this, I am paying from all the other remaining 99 people who has contributed, right? So if I pay him extra, I am making, I am unfair to others. So for some specific loss, everybody should get the same amount. So they have to be very fair. So that's a claim. And then of course the enterprise operations. Yeah, there is risk management, IT, very huge thing for them. Reinsurance management, we saw what is reinsurance. Investment management, we will drop the investment management part for time being. Risk management, compliance. So every time there will be a government body who is checking the working of insurance company. You go anywhere in world, yeah, and as you go along, people are going to tell you that insurance in US is different, that is so good, India in insurance, that is all wrong. I have worked in almost, apart from Australia, all continents I have worked in insurance, and I'm well aware of all practices, and every insurance company has same practices, has similar products, because every insurance company is connected to each other through a reinsurer. So they know what I'm selling. So they will also try to sell similar products. So don't ever buy that idea, Indian insurance companies are not good. Yeah, all insurance companies are same. The point I was making is, in every country, there is a government body who regulates insurance. So that's a compliance. So every time they have to tell that. So that company, that regulator will say that if there is a car claim, it has to be settled in 3 months, or some whatever the regulations, right? But these kind of regulations they will create, and the insurance company will have to comply. So huge compliance department required, and of course then accounting and finance. So these are the business processes in an insurance company. Right, so where we started with what is insurance. Then we came to what sort of entities are there, and then we saw key business processes, right? So now let us move to types of insurance. So basically, very broadly, there are two types: life and non-life. Interestingly, health is part of non-life. And why? There are that's a longer explanation. I'm not getting into that, but let us stick to this life and non-life. You go anywhere in world, this kind of so there will be life, health, and non-life, or life and non-life. That's how the bifurcation always will be. Yeah. So term of insurance, how many year, 2 years? So life policies are always long-term policies, and non-life policies are short-term, means 1 year or even sometimes less. COVID coverage is 3 months and 6 months. What life offers, risk cover and also investment. So you will see a lot of life insurance companies, or if you see there are banks who now have insurance companies, or who are partner with some insurance companies, tries to sell you deposits, saying that you will get return on your investment, but they are actually selling you a life insurance policy. Yeah. So life insurance policies cover risk of what? Death, right? Because we are in life, and investment. And I will come to what are risks under life at some time. Next slide, right? So they cover only life. They don't cover. So actually, so or you can say they cover death, but life, they cover life. Whereas in non-life, what happens is they cover only risk. They don't give investment returns. So anything happens to your car, it will be given back. If you get COVID and get hospitalized, you will be paid. If nothing happens till, let's say, next March or something, we get a vaccine, then whatever premium you have paid, you are not going to get anything out of that back, because they are covering risk only. In non-life, it covers property, liability, also life, because there is health, and so on and so forth. There is health and personal accident. That's where I said life. So the list is quite long. We will see. Almost everything under the sun is covered by non-life. Yeah, they cover even a cow, yeah, or a sheep, and they also cover a Chandrayaan, right? Everything in between they will cover. They will cover a cricket match also. So that's non-life. Policy returns, there is sum assured, what is called as sum assured in life, because the sum is assured. It will be returned after death to your family, or there are other types of policies, after 60 years you will be returned. But that sum insured is written. Very few exceptions, term policies where it is not written. We'll come to that. Whereas in non-life, it is called sum insured, not assured. It is insured. And only if you have loss, you will get it. And life is not a contract of strict indemnity, whereas non-life is a contract of strict indemnity. What is that? Let's not get into that. This is not the detail. I'm just trying to tell you. But this is one way of classification. There can be another ways of classification. There are exceptions to it. This is a broad classification. Now, let's see what life covers. Right? There are term policies, term life insurances, and actually all of you should do it. I'm not selling insurance here, but when you are young, if you get a term policy, it's very cheap. So it says that from age of 27 or 25, whatever is your age, till age of 65, 70, whatever term, that is a term. What is term you take? Anything happens to you, your family is going to get X amount of money. There is no investment in that. There is nothing going to be come back to you. If you survive that, whatever premiums you have paid is gone. But if anything happens, your family is taken care of. Then cash value life insurance, and there is an investment part of it. So there are term insurance. There are various ways of term insurance. I've just listed. I'm not going to go into details of those, longer discussion. Then there is something called as endowment. So it is where they start talking about investment. So what they do is they get 100 rupees. So when they say that to cover this, we will need 100 rupees of premium. So they are going to ask you 110 rupees. Out of that, I'm just giving very arbitrary numbers. Don't go by that, just for explanation. Right? So out of that, they will use some 70 rupees to build your fund for in an event of eventuality. and 40 rupees they are going to invest in market and they are going to get return on it. Now what they do to this return, they will give you back that return. Yeah, for example, there is a money back policy. After every 5 years you will get something, or marriage or education endowment policies. So your parents might have taken education endowment policies saying that when my son becomes 22, I might need to pay for his engineering or MBA or whatever. I will need some 2 lakhs rupees, 5 lakhs rupees, 10 lakh rupees, whatever. And they have taken this policy. Yeah. So this is where you will get something assured, you will get something back. That is assured. But that's not the only risk in life when it comes to life. What is another risk? When you think of another risk when it comes to a human being, death we have covered in this, all these other policies. What is equally dangerous risk?
Accident.
About it? It is about leaving. Yeah, life, leaving is also a risk. What happens is we will be employed till 60, 70, whatever, right? But at some time we stop earning, and after that we live for 20 years, 30 years, 40 years. So, and that's a time when we are going to need money more, because hospital, etc., right? And those are called annuities. Yeah, so it is still you are alive, you will keep on getting some small amount every month or a year, whatever payment term you choose, a monthly, quarterly, yearly. So you keep on paying to insurance company, and after 60 years, they will start giving you back. These are called annuities. And again, there are various variation in that. What you see here, all these variations are not even, 10 or 15% of what variations actually available. This is just to give you an overview. So this is about life. Now what non-life will cover, of course there is group life insurance policy. So typically your company will take this policy. Yeah. So all companies will take a life insurance cover for the highest executives, the CEO, CFO, etc., board of directors, and all of that. Yeah, they can take a group policy for them, or for all the managers they might take. So these are group life policies. Now coming to non-life. Non-life is divided into, again, that's a way of classification, need not always be like that. It's about how you look at it. It's personal insurance, commercial insurance, and health insurance. Now, what are those? Property. In India, it is called fire insurance. Property. So property can be personal, property can be commercial also. Marine, cargo, and hull. Cargo is whenever you order something which is coming through Amazon, that is a cargo. And if something happens to that, who's going to pay? Amazon is not going to pay, right? You are not going to pay because it has not reached you. And the person who's sending is not going to get his money because the goods are damaged. So that cargo is insured. That is called cargo insurance. Now you have seen the pictures of huge vessels, right, which carry this cargo. Huge, they are huge. They're super tankers, right? They carry everything in sea or on the land, right? Anywhere. It need not be only sea. So it is called hull. Yeah, anything you are importing will come through sea, and then it will come through land, and everything is covered. It also can come through air. So all of that is called as hull insurance, marine hull. Yeah. Okay. Now vehicle insurance, that almost everybody knows, because you are afraid of police going to catch you, so you buy that insurance. Personal accident. If something happens to you, and when I say you will feel bad, but I'm from insurance, so we say that, right? If something happens to me, I'm riding, and if I lose one digit of my hand, right, this insurance policy will pay me some amount. If I'm injured and if I can't go to my office for 6 months, my office is going to pay me for 2 months paid leave, but 4 months this insurance policy will pay. So this is personal accident. Health is where you get admitted to hospital, your bills will be paid by insurance company. House owners, you have a house and the contents inside, so anything happening to those contents, it's a house owner's policy. Short circuit, gas leakage, flood, anything. Right? Now, liability insurance is a product, public and professional. So tomorrow, if a doctor makes a mistake and if you put a claim on him, he doesn't pay it from his pocket. He has paid insurance company some money, and insurance company is paying you that. If a product is faulty, something happens to you, you put a liability on that product company, you get it. Right? So public. So those who know, very recently something happened, I guess, in Andhra, right? And earlier it happened in Bhopal also. There was this gas leakage. Now thousands of people get affected. So you have to give compensation because it is from your company, your factory that has happened. So that is public liability. Then there is burglary and theft. You can understand this, right? Any theft and burglary at my house, my office, my shop. Aviation is for, as the name suggests, it is the the aeroplane or any other, so helicopters, anything which is airborne vehicle comes into aviation. Right? Engineering, so you are building a huge bridge, you are building, so metro, the metro is constructing everywhere, right? So they need an engineering policy. Something goes wrong. Livestock, when you have, if you are having a dairy, you need a livestock insurance. If you are having a poultry, if tomorrow something happens, some virus comes and all your livestock has to be killed, right? Or they die, you need livestock insurance. So this is about life and non-life, right? So why it's all this is happening, why I am talking to you about all of this, and what is the use of all of this? That's fine, there somebody is making money and somebody is getting money, but why? What is it? What is the importance of insurance? Insurance plays a very, very, very big role in economy, and insurance stabilizes economy. Insurance helps commerce, and we will see, allows efficient risk management. You and me individually can't manage all the risks, whereas insurance companies, they have experience of so many risks that a lot of efficient risk management modalities they have chosen. They educate us, and that is how. So your car has a seat belt. How do you know that has started coming? That is because insurance companies started paying incentive on having seat belts, having the airbag, right? That is how they have suggested all of these things. Always insurance companies are the one who start giving these ideas. Then how to mitigate a loss, that is also insurance companies expertise come into picture. Now don't consider a loss of only a small vehicle. It is about loss of, let's assume, a huge factory. What you can salvage from that is what they will. So that's a very huge amount of money saved there, right? Enhances peace of mind and promotes financial stability. So if you are earning something, you get married, you have family. Now what happens if something happens to you? That is a tension you will have. So you take insurance policy. Now once you take that, that's a peace of mind. Whatever remaining amount you have from your salary, that then you can start using it for investments, using it for your leisure, etc. If that would not have been the case, the 1,000 rupees, out of that 600 rupees you will have to keep on saving and saving for some. What happens if something happens if I'm not around, right? So that is peace of mind and promotes financial stability. Again, here you don't only look at yourself, think of large businesses, right? Huge businesses with huge factories. If there is a fire to factory, If there is no insurance, that owner of the factory will have to keep funds separate. Don't touch it, because if tomorrow there is fire, he has to use that. But once he buys the insurance, a lot of funds becomes free for investment and using for his business, right? It facilitates trade and commerce. That is why we can import goods. Otherwise, there is no import export if there would not have been insurance. And actually, birth of insurance is from this import export. Yeah. So that's why there is economic growth. Now, most importantly, which I skipped because I'm talking directly about business, understand that it reduces the burden on government for providing social security. So we pay taxes to government. Government uses that for our benefit, for creating infrastructure, etc., etc. But government has to keep a huge portion aside for eventualities, right? And these eventualities, if government keep on keeping this portion for only eventualities, how that government is going to use it for commerce, for infrastructure? But if all of us start taking insurance, if all businesses start taking insurance, the burden on government is reduced to provide social security. That is very, very important part of the entire mix. So it mobilizes domestic savings, you can understand. And it is called efficient allocation of capital. I just explained it to you, right? The factory owner can use his capital not for unforeseen events. He can use it to create another factory, because he can pay a very small amount as a premium. So a lot of money is now free for him to invest into something. So how I use my capital efficiently is possible because I have insurance. Right? So this is the importance of insurance. Now, we have so far covered what is insurance, why it is important. Now, we are coming to what it is related to you. I think this is the most important part for you guys, is to understand what are opportunities for me. Right? You have been going on for more than 1 hour now. Why? What is in it for me? We are coming to that part now. What is in it for you? So to understand that, we also need to understand how big insurance is. Right? Because everybody knows that IT is big, IT is big, IT is big. When I show you figures, yes, you will realize how big insurance is, and IT is not even near to that. Now we will come to that. Okay. So how big is insurance? India expected market size is 2000 crores in 2020. When it says market size, it is about this year's premium only. Yeah, this is about only this year's premium. Insurance companies, so LIC is more than 100 years. New India insurance company completed 100 years. So every year, these kind of money they are getting as premium. Yeah, so that's huge. They are 280 billion. Again, this is premiums only, not the worth of the insurance companies. Please understand that. Yearly premium, every year. Yeah, now think how big this is. Yeah, 4 billion software companies. Oh, here their turnover is 4 billion. That is how it is considered. This is 280 billion, and this is India. And in India, the penetration of insurance is very low, and that's why there is humongous opportunity for you guys in insurance. How big it can grow? Globally, it is 6 trillion. Yeah, or 62 lakhs billion, or whatever, however you want to read that number. That is how big it is. Even Korea has a bigger insurance than India. US has a huge insurance field than India. US population is 1/6 of India's population. Korea's population is not even will be about to Kerala also. Right? European countries have huge insurance. Not even one country will be bigger than an Indian state. So in next 5, 10, 15 years of your career, the growth of insurance is going to be this big, and that's your opportunity into this. Right? That's where I just picked up two of this. So brand value perspective. Do you know which is the second one? So first one is Tata's brand value perspective. Is it Reliance? Actually, it is LIC of India. A brand value. That is how big these companies are. Insurance companies. We just don't understand that they are big. Okay, those who follow stock market know that when there is a volatility, they ask LIC to step in. They ask other insurers to step in and stabilize the market. That kind of money they have. Yeah. So very quickly, currently India has 24 life insurance companies. Number of offices are 11,000. Yeah. And number of agents. See how many are there? 21 lakh agents. Now these agents are not insurance employees. 21 lakh. Yeah, that's opportunity there. At 21 lakhs. And then total premium. See how much is the total premium? 5 trillion crore was the total premium. This is last year's, right? And brand value, as I said, 8.1 billion US dollars. Right? That is life insurance in India only. Non-life insurance in India, 34 companies. Number of offices again are 11,000. 1.7 trillion. So the thing is, life insurance premium is higher than non-life insurance, because life insurance premium, they give you returns, whereas non-life don't give you returns. So they are the percentage is very less. So for example, a fire insurance, we charge 1 rupee 30 paisa per milli, or that is per 1,000, 1 rupee 30 paisa. So that is 10,000. That is how it is so less. Yeah. So this is non-life in India. Please understand, I have now started getting into giving you an idea of opportunity what you have. So this is very recent. In May, somebody has predicted, recommended that 5 prominent companies are looking to hire 5,000. That is I just picked up some random news item, 5. We have seen that there are 50 insurance companies, 24 here and 34 there, so around 50. So 50 into 5,000, that is immediate employment which is going to happen. If you see currently how many are there, 6 lakhs are employees, not contract workers. Those are agents, which are 21 lakh. We saw LIC has 21 lakhs. And this life insurance has 21 lakhs. So there is tremendous opportunity, lakhs of jobs available in insurance. Right? That was the point to show you all of this. Now these jobs, right? And I kept on saying, whenever I was kept on talking about life insurance in India, non-life in India, and I kept on harping that in India. So there is another opportunity in India which is related to insurance, and I can say that because with authority, because from 2000 I have been instrumental in creating this for many companies, which is called as domain, insurance domain. So for Accenture, I have done it. For HP, I have done it. HCL. So in various companies is where we build a domain, insurance domain specific career stream. Now that is technology opportunity. And here are some numbers. So global insurance tech market. Insurance tech is disruptive technology in insurance. So if you see, there is an ad for Eco insurance in TV. There is also a digit insurance. A lot of things what you buy online, you get a digit insurance. So digit and Eco, These are virtual insurance companies. They do not have an office where you go and sell. There is nobody who's going to come and ask you to sell. It is only through technology they are doing it. So these are disruptors. Yeah. So I am actually a part of one company where we have an app whereby you take a photo of R from 4 angles, very specific 6 angles actually, and within seconds we tell you what is the exact loss, and this is based on artificial intelligence. So now this is insurtech. This is something new which is coming. So that is insurtech market. That's value is 10 billion by 2025, right? And global spend on information technology by insurance company in 2018 was 200 billion, and North American insurance companies are spending 82 billion yearly. But why this is important, why I'm talking about all of this, where do you think all this work happens? This work happens predominantly by Indian IT industry. All of these jobs are available to you provided you get required knowledge. And this is the third area related to insurance for your job opportunities. You can be in life insurance, you can be in non-life insurance, you can be a surveyor, you can be, and what all we will see. Right, career opportunities, what all are there? So actuarial, if you are excellent in maths and statistics, and if you have patience, clear 9 subjects of actuarial and you will earn like anything. Actuaries are so well paid. They are so well paid. Yeah, but you should be a maths wizard or a statistical wizard. Yeah, but those who have been doing MBA in finance, and if they start working somewhere and they continue to pursue this, you can keep on giving your papers. There are 9 papers. It might take 8 years to complete them, but after year 8, your career will just skyrocket. Actuarial, that's one area. Then underwriting. So what are the skill set here required is general management and analytical abilities. Then the next one is claims management. Here again you need general management and engineering qualification of all branches. Yeah. So as I said, if your basic is let's say mechanical engineer, you also might have done MBA, you can get into claims management because both of these are required. Again, all 3 are well paid, nothing compared to actuarial, but underwriting and claims are really well paid. Business operations, huge operation they keep on doing, huge operations, and there is no dearth of employment opportunity in this area. Yeah, of course there is human resource, legal, accounting, compliance, so many. Sales and marketing, I don't have to spend time here. A lot of you know this, how sales and marketing works. But insurance is not a pull product, it's a push product. So sales and marketing is where a lot of money of insurance goes. Tremendous opportunity there. Don't think that those agents, what is there in agent earn quite sumptuous amount of money, and it is perpetual. Customer service, again, communication skill, interpersonal skill, general management skills, and that's another huge opportunity area. Data science, if you have this ability of data, if you have analytical and innovative mindset, it's going to be a booming industry there. So it need not always be only about how to do the part of, just hold on, it's never always about how to do the analytics part. It also requires a lot of business acumen, which can come from your business analytics, business management, comes from your business management abilities. Yeah, so that is about data science. Then information technology, skill sets of software, infrastructure skills, etc. And I showed you all of that. But again, here your MBA backgrounds also comes into play, and there are a lot of opportunities for managing this resources, etc. are available. So these are all career opportunities. We have seen how big this can be, right? Now, how will I get into this? All of this is fine, but how will I get into this? So in India, there is National Insurance Academy in Pune, Premium Institute, many courses. They also have PGDM, uh, Insurance Institute of India. It has got certifications and professional qualifications quite cheap, and you can do it online. You can do it at your own time, and a couple of qualifications can get you good jobs in even IT, apart from, of course, insurance. Uh, so anybody, for example, let's say if you have done marketing in MBA in marketing, and if you do this Insurance Institute India's licentiate, which is such a easier exam online, your chances of getting a management position in insurance company increases. Right? A lot of private institutes are also there. They also do a lot of courses. Uh, from international perspective, there is the institutes. This is from US. It's now called the institutes. It's earlier called AICPCU. Their qualification is CPCU. So if you by chance get into any company, IT company or something, and if they are paying you to do this CPCU certifications, please make sure that you do it. Your career growth changes. These are for general insurance. Then there is LOMA, a life insurance. Uh, this is again from US. Same way, a lot of certifications available online. Both of that you can do online, sitting in India. Then there is CII of UK, very, very famous and the mother of all institutions kind of a institution. And actuarial certification, what I was talking about, right? Actuarial Society of India and at Institute and faculties of actuaries of UK. So these are how you can get into these careers, right? So we started from what is insurance, then we went to understand what are the various processes they have. So that was the entire part of types of insurance. What is insurance? Then we came to how they work, which are the all entities there, right? Then we understood what is the current status of insurance, how big it is. Then we saw what are the opportunities, and then lastly we are seeing what are the educational options. Right? So I am done with my presentation. If you have questions now, I will take questions. Now go ahead. If you have questions, you can type in those questions, or if there is a the moderator who's going to take those questions. I'm fine. I can take those questions now.
Students, go ahead and ask any questions, any doubts you have. You can get it clarified now. Sir, I guess they don't have any question. You can just maybe let them know, like, in what way they can prepare rather than taking up the certification courses like you mentioned. Is there, any other alternative ways they can prepare for this domain? I can just highlight on that, sir. Students, any questions you have? No, I guess the no questions. I think Harshit sir, you can propose a vote of thanks.
Hello, Dharmendra sir. Good afternoon. I'd just like to say a few words. This is Professor V.V. Rajan.
Please go ahead, sir. Please go ahead.
Hello, sir. Hello, sir. Professor, Mr. Deshpande, first of all, thank you so much for doing this session with our students and the other two groups that you'll be doing. I'm really sorry I couldn't attend the session earlier. Was really running into too many things. And I have been personally informed by Anand sir that he'll be calling you after the session and probably he'll talk to you. That's one. And he actually had some family emergency. That's why, for the past 2 days, he's not been kind of active onto this, but he should definitely be back by Monday or something like that. So Pramod sir, really, thank you so much for doing this for the students. I really hope and, feel that they found the session valuable, whatever you had done today. Thank you so much, sir.
Yeah, thank you, Rajan, and thank you, Dharmendra sir. Thanks, everybody. I guess I can log out, right?
Yeah. Thank you, sir. Thank you.
Thanks.
Thank you, sir. Thank you.